when you're buying paper assets and you're hoping and praying they go up in value, you're gambling. And I'll tell you what, the odds are not very good right now, because it's very obvious with the unemployment, the layoffs, the business failures, that GDP is going down. The stock market is a derivative of GDP. It is the economy's way of saying what they believe our businesses are worth in this country. And right now they're saying they don't see the value. And if they don't see the value now, what are they going to see when unemployment is at 10% and not 7%? Yes, they're predicting 10% unemployment. Right now we're at 7%. It's going to get worse before it gets better. What are they going to think when people are unemployed, when they extend unemployment benefits, when businesses are folding and closing their doors? What are they going to think then about the Dow? I had a conversation with an economist the other day, and he thought that I was very optimistic to think that the Dow was going to go to 6,000. He thought that the Dow was going to go to 3,000. He saw it coming, or he sees it coming. He said within the next 2 years, he sees the Dow hitting down around 3,000 when we hit the bottom of the recession. So can you afford to lose 70% of your net worth? That's what they're talking about. Now, on the other hand, let's look at the haves, because that's the have-nots. Those are the people that are losing everything. I went out and met one of the investors the other day. He had an apartment complex that he just recently purchased right around where I'm purchasing mine. He paid $29,000 a door for the apartment complex. He's putting $3,000 a door in it. He's already raised the rents $50 a month on the property. Across the board, $25 a month, but in some of his units that are more in demand, he's raising it $50 a month. He has renovated the property. He's still renovating. He's in the process. He's almost done. And he is looking at a situation where he is rocking. I mean, it's just amazing what is going on with this gentleman's opportunity. And you have to understand, he's only one of many doing exactly the same thing. Now, on the other hand, the have-nots are the people that came into town and bought these properties over-leveraged at twice or 3 times the price of what they should have paid. And then they over-financed them, so they have too much debt service, and they didn't bring any extra money in to renovate the properties when they bought them. So they have an old, deteriorating product that has too much debt in a market that they don't understand, in a business they really don't know how to operate. These types of people right now are selling their properties, are not selling their properties, are actually losing their properties in foreclosure, and we're able to buy them back from the bank. The truth of the matter is, though, the bank owes more on them with those notes than what they're really worth in the condition that these operators have dropped these properties into. And so we are getting properties that we are able to buy properties at ridiculously low prices.